ขอต้อนรับเข้าสู่งานนะครับ FTSE Sustainability Assessment and Key ESG Trends นะครับวันนี้ตลาดหลักทรัพย์นะครับได้รับเกียรติจากทางทีม FTSE นะครับมาร่วมให้ข้อมูลเกี่ยวกับการประเมินเรื่องของ ESG หรือความยั่งยืนนะครับโดยงานในวันนี้นะครับเรามีวัตถุประสงค์นะครับเพื่อให้บริษัทนะครับได้รับทราบนะครับหลักเกณฑ์และขั้นตอนการประเมินความยั่งยืนจากทาง FTSE นะครับเนื่องจากว่าปัจจุบันมีบริษัทจดทะเบียนไทยหลายแห่งนะครับได้รับการประเมินเรื่องความยั่งยืนจากทาง FTSE นะครับแต่อาจจะยังไม่ทราบว่าจะต้องมีการให้ข้อมูลอะไรทาง FTSE บ้างแล้วก็ต้องมีการตอบกลับข้อมูลกลับไปทาง FTSE ด้วยหรือเปล่านะครับก็เลยเป็นที่มาของการจัดงานในวันนี้นะครับก่อนที่จะไปพบกับทางทีมงาน FTSE นะครับผมอาจจะขออนุญาตเข้าสู่ช่วงพิธีการสักนิดนึงก่อนนะครับแล้วก็เนื่องจากว่าวันนี้นะครับทีมงานของทาง FTSE ของเราที่มาร่วมแชร์ข้อมูลนะครับจะเป็นชาวต่างชาติทั้งหมดนะครับผมอาจจะขออนุญาตรันงานนี้โดยใช้ภาษาอังกฤษเป็นส่วนใหญ่นะครับ So now may I invite Executive Vice President and Head of Sustainability Development of SET คุณรัตวลี อนันตนานนท์ for a welcome speech
สวัสดีค่ะขอต้อนรับทุกท่านเข้าสู่งานสัมมนา FTSE Sustainability Assessment Key ESG Trends อย่างที่ทุกท่านทราบกันดีนะคะว่าในปัจจุบันภาคธุรกิจทั่วโลกต่างให้ความสำคัญกับการดำเนินธุรกิจอย่างยั่งยืนที่มีการทำธุรกิจโดยคำนึงถึงเรื่องของสิ่งแวดล้อมสังคมแล้วก็บรรษัทพิบาลหรือที่เราเรียกกันว่า ESG ประเด็นความยั่งยืนนับวันจะทวีความสำคัญมากยิ่งขึ้นเพราะว่ามีการเปลี่ยนแปลงที่สำคัญแล้วก็รุนแรงในทุกมิติของ ESG ที่ส่งผลกระทบทั้งในเรื่องของระดับบุคคลนะคะหรือว่าจะเป็นองค์กรเองแล้วก็สังคมโดยรวมไม่ว่าจะเป็นเรื่องของปัญหาภาวะโลกร้อนวิกฤตพลังงานภาวะเงินเฟ้อแล้วก็เรื่องของความเหลื่อมล้ำทางสังคมปัญหาเหล่านี้ทำให้ธุรกิจต้องปรับตัวเป็นอย่างมากตลอดระยะเวลาที่ผ่านมาตลาดทรัพย์จึงได้พยายามที่จะสนับสนุนให้บริษัทจดทะเบียนของเราเนี่ยมีการเตรียมตัวมีการเตรียมความพร้อมนะคะเพื่อให้สามารถที่จะปรับตัวได้ในทุกสภาวะมีความเข้มแข็งแล้วก็มีการเติบโตอย่างยั่งยืนในระยะยาวโดยการส่งเสริมการปฏิบัติโดยการนำ ESG เข้าไปอยู่ในกระบวนการดำเนินธุรกิจการเปิดเผยข้อมูลต่อผู้มีส่วนได้เสียการประเมินด้านความยั่งยืนผ่านแบบประเมินหุ้นยั่งยืนหรือว่า THSI รวมถึงการประเมินด้านความยั่งยืนจากผู้ประเมินสากลเพื่อให้บริษัทได้รับการยอมรับแล้วก็อยู่ในสายตาของผู้ลงทุนสำหรับงานสัมมนาในวันนี้นะคะจะเป็นการสร้างความรู้ความเข้าใจให้กับบุคลากรของบริษัทจดทะเบียนรวมถึงสถาบันตัวกลางแล้วก็ผู้ลงทุนสถาบันอย่างเช่นนักวิเคราะห์หรือว่าผู้จัดการกองทุนเพื่อให้เข้าใจถึงหลักการมุมมองแล้วก็เหตุผลของการประเมินความยั่งยืนของผู้ประเมินระดับสากลอย่าง FTSE ในวันนี้นะคะข้อมูลที่ FTSE ใช้ในการประเมินความยั่งยืนจะเป็นข้อมูลที่เปิดเผยบนสาธารณะนะคะหรือว่าที่เราเรียกกันว่า Public Information ซึ่งจะสอดคล้องกับทิศทางของการพัฒนาระบบจัดการข้อมูล ESG Data Platform ของตลาดหลักทรัพย์ที่จะช่วยให้ธุรกิจสามารถที่จะประมวลข้อมูล ESG เพื่อใช้ในการติดตามแล้วก็ตัดสินใจเพื่อยกระดับการดำเนินงานของตัวองค์กรได้ดียิ่งขึ้นแล้วก็สามารถที่จะดึงดูดให้ผู้ใช้ข้อมูลสามารถเข้าถึง ESG Data ของบริษัทได้สะดวกยิ่งขึ้นแล้วก็ที่สำคัญนะคะผู้ประเมินเองนะคะไม่ว่าจะเป็นในประเทศหรือต่างประเทศก็จะสามารถเข้าถึงข้อมูล ESG ของบริษัทได้อย่างมีประสิทธิภาพมากยิ่งขึ้นตลาดทรัพย์หวังว่าการสัมมนาในวันนี้นะคะจะเป็นประโยชน์ในการช่วยเตรียมความพร้อมให้กับบริษัทจดทะเบียนรวมถึงช่วยสร้างความรู้ความเข้าใจในเรื่องของการดำเนินธุรกิจอย่างยั่งยืนผ่านมุมมองของผู้ประเมินในระดับสากลให้กับนักวิเคราะห์และก็ผู้จัดการกองทุนด้วยวันนี้ในนามของตลาดหลักทรัพย์แห่งประเทศไทยนะคะต้องขอบคุณท่านวิทยากรจาก FTSE ที่มาอัปเดตความรู้เรื่องของ ESG Trend แล้วก็แลกเปลี่ยนมุมมองในการประเมินความยั่งยืนที่จะช่วยส่งเสริมให้เกิดการลงทุนอย่างยั่งยืนต่อไปขอบคุณค่ะ
Thank you so much คุณรัตวลี for the welcome speech. So before we move on to the sharing session from FTSE team, I just would like to inform all participants if you have any questions, you can key questions in the chat box in English only. And please do not use the microphone to make sure that we wouldn't disturb our speakers during presentations. And then FTSE team will come back to your question at Q&A session at 11:45. Okay, now I think it's time, and I would like to invite and welcome FTSE team, and please give a big round of applause for Deepak Kuruna, Helena Fung, Vivek Berman, and Eileen G. Thank you.
So thanks, Vivek, for all the help. At the outset, I would like to extend my sincere thanks to the team SET. We sincerely appreciate your partnership for the event and enabling this profound forum. A warm welcome to the audience as well on this forum today. We're keenly looking forward to having an engaging session with you all. My full name is Deepak Kurana. I am responsible for driving the index and analytics business in South Asia and ASEAN markets. We have an extensive and topical agenda for today's event. We broadly want to cover 4 key sections in our presentation today. First section is sustainable investing and sustainable finance trends. I will be covering this section. Second is FTSE ESG assessment framework and performance overview of Thailand companies. My colleague Vivek, ESG content quality lead, shall go over this section. The third, FTSE for good and other sustainable index solutions from FTSE Russell. Helena Fung, our head of sustainable investing, APAC, shall be covering this section. And fourth, case studies on Thailand companies. Irene, senior manager from our ESG content team, shall be covering the section. So I again want to acknowledge that we are discussing a very topical subject today. Sustainability and ESG is one of the important structural changes that are transpiring in the financial and corporate communities. People globally trying to align themselves with evolving practices and gearing up for the ever-changing world. So with this background, let's dive into the first section of our presentation, sustainable investing and sustainable finance trends. Vivek, I will give you a clue in terms of when to move the slides. So thanks for all the help so far. The first trend I want to share is around UN PRI signatories. Principle of responsible investing. PRI is the world's leading promoter of responsible investment. The key objective is to understand the investment implications of ESG factors and support their global network of signatories for the same. They help their members to incorporate these factors into their investment and ownership decisions. The PRI signatory numbers continue to see a strong growth. As you can see from the screen, number of signatories increased to around 4,900 by 31st March this year. To provide further breakup of numbers, the total number of signatories around the numbers that I just mentioned, that includes almost 4,400 investors and 500 service providers. So these numbers translate into a very strong year-on-year growth around 28%. Total AUM of investor signatories is now estimated at US dollar 121 trillion. So it's quite a large, sizable numbers now. Further, 88 asset owners became PRI signatories in year 21-22, making it the third largest year for asset owner growth and bringing the total to 681. So it's a large asset owner community that is now aligned to PRI. All these staggering numbers reflects that ESG investing continue to gain momentum. Every investment made by these signatories goes through a comprehensive ESG assessment. So while this trend is quite strong globally, we are also seeing initial adoption of PRI in Thailand as well. Large investors like K Asset and GPF Thailand, they also have become PRI signatories. Corporates in Thailand that wish to receive capital flows from these signatories need to ensure better performance on ESG standards. While capital pool globally is quite large, more local investors shall also insist on better ESG practices in due course. Let's move to the next slide, Vivek. Now moving to another interesting piece, trends around ESG labeled funds, the funds that are explicitly sort of positioned, labeled as sustainable investing or ESG strategies. We saw a strong growth, almost a checkmark shaped recovery in the global AUM of ESG funds post-pandemic. Regulatory changes, investor demand, climate risk awareness, these are some of the key reasons for the steep growth that you see on the screen. More recently, in Q3, global AUM of ESG funds largely followed the track of the markets. It has been moving as per the movement that we have been seeing in equity and the bond market. Global AUM of ESG fund saw an uptick during midsummer rally and then subsequently a downward trend thereafter. The markets have been largely driven by high energy and food prices, mainly on account of Russia-Ukraine conflict. Central banks have taken aggressive stance over ever mounting inflation, have gone for aggressive interest rate hikes. And in his recent comments, Fed chairman suggested that they will continue to maintain the aggressive stance on rate hikes going forward as well. So on back of this guidance from Fed, equity markets came off from the recent peak. The yield of 10-year from its peak of 2.5% in July went up to 4%. These macros largely explain the story that we see in the screen. Just one second, I'll just switch off my phone. A systematic and a structure. So from the numbers that I mentioned and the trend that we can see here on the screen, a systematic and structural growth over longer term period that can be seen, but few hiccups in the recent short term, mainly driven by market volatility. So the long-term growth, the trend is pretty strong, but we have seen a bit of a hiccups in the recent past. These macros largely explains the story that so corporates looking to raise money through DCM or ECM activities globally should make a note of these trends, and they shall accordingly chalk out their capital raising plans, as we move forward. We'll move to the next one, Vivek. Right. So on this slide, we can see the breakup of AUM into different asset types. That's more on the percentage terms. Equities have expanded their leadership in the AUM mix. This is mainly on the expense of other asset types like bonds and money markets. We can see from the slide that bonds have lost a bit of ground recently. Investors seem to be recognizing the interest rate cycle and reducing their allocation to bonds. Going forward, as inflation starts to show signs of moderation, interest rates will likely to react fast. And the attractive yields that we're seeing in the market on quality bonds shall start generating some good returns in the bonds. And it won't be surprising to see, if we see more inflows into bonds in Q1 or Q2 next year, provided we see some evidence of easing from Fed, as we move forward into next year. Stocks, meanwhile, may take a bit longer to recover as recessionary forces are expected to prevail throughout the next year. Therefore, equity may see relatively lower pickup as we get into the next year. Again, corporates should make a note of this trend and accordingly chalk out their capital sourcing plans, as per the movement that we are seeing in the market. We'll move to the next one, Vivek. Right. So here on the slide, we can see that the breakup of the AUM of ESG funds into various regional markets. We can clearly see the leadership of EMEA and offshore markets here. Offshore markets mainly Luxembourg, Ireland, where these Tech 7 related funds are domiciled. We are seeing efforts made across 3 major developed markets to drive higher standardization of disclosures, as well as loosely aligned taxonomies for grading companies and by extension funds from their for their ESG profiles. The EU via SFDR, UK via SDR, and US via the SE's recent proposal, all are moving towards a 3-tier rating construct. So these framework essentially grade companies and funds from light green to the dark green. The disclosures underneath is still not fully aligned, but the enhancements in future will hopefully draw them closer to single standard. So uniformity in the disclosures, uniformity in taxonomy. That's the way forward, which is expected to as we move along and kind of keep building onto this category. We'll move to the next one, Vivek. Next one, Vivek. Yes. While EMEA continue to maintain a strong leadership, we are also seeing a strong growth in US and Asia markets. From the low base, these two markets now seem to be picking up momentum and growth. We are seeing some conflicting developments as well. In May, Mr. Musk called out ESG as a scam after Tesla was removed from one of the leading indexes in US. On the other hand, Exxon, a long-term environmental offender, remained in the same index. So on a similar lines, several US states known to be red in political lobby have decided to remove firms from BlackRock from managing their statement retirement plans. SEC recently fined Goldman $4 million over banks' failure to follow ESG policies and procedure. So, there have been some mixed developments, mixed messages. Such counterintuitive events often create confusions around the usefulness of ESG investing. So in absence of clear standards, investors tend to shy away from incorporating ESG factors into their investment decisions. So greenwashing needs to be avoided and for better adoption of ESG practices. Again, corporates focused on specific regions for their capital requirements shall make a note of this trend. EMEA, is a great source of, capital flows, for the companies that have better ESG performance. So accordingly, they can tap into the capital or the sources that are available in these different regions. So we'll move to the next one, Vivek, quickly. So now moving to the regional trends in Asia. So first observation is that the propensity of growth in Asia post-pandemic has been relatively higher. The region has seen a strong uptick in flows post-pandemic. Another observation is that the scale and the size of ESG funds in Asia is relatively smaller. We are around 2.5% of global AUM for the ESG funds, which is relatively much smaller compared to our overall share in the global markets. Are the Asia's contribution to the global AUM from the the traditional or the conventional funds on an overall basis hovers somewhere between 12 to 15%. So ESG sustainable investing category being around 2.5% of global AUM is relatively lower. So ESG or responsible investing in Asia relatively still lagging our global peers. We are seeing extensive efforts across region to improve sustainability adoption. Regulators and exchanges are pushing corporates to improve disclosures. Central banks are pushing for taxonomies and disclosures around climate risk, mainly through TCFD framework. Leading asset owners from the region are PRI signatories now deployed. They've deployed specialized sustainable investing teams, pushing their fund managers for sustainable investing implementation at their end. Thailand, per se, as a market, is also seeing similar trends in the local market. We spoke about initial adoption of PRI, K-Asset, GPF. They have already aligned to PRI. Central bank is also pushing for the taxonomy and better disclosure. So very much aligned to the regional the developments that we're seeing. Last observation is that the AUM movement is quite similar to the global trends. We see a constant sort of downward trends this year in terms of the AUM, which is largely aligned to the macros and also the global trends. We'll move to the next one, Vivek, quickly. Yeah, so just like global markets, equity is the largest asset type here in Asia. However, the same asset type is much larger here in terms of the percentage relative to the global markets. So other products within our region is relatively still evolving. A few reasons for that is local asset managers are still building their expertise to build ESG focused fixed income products. So you kind of need to understand the process, to map the the company level ESG sort of attributes to a fixed income instrument. Within fixed income space, you have short term and long term instruments, and the implication of ESG practices are relatively different between the different tenor of instruments. So the processes, the practices, and the understanding about investing within fixed income is still evolving within our region. Moreover, the regional investment products, they also invest in bonds issued by private companies, and we all know that getting ESG data on private companies is quite a challenge. So that's another reason why we have limited ESG AUM in bond funds within our region. So again, corporates focused on specific channels for the capital requirements in Asia can accordingly can make a note of this trend and accordingly plan their capital sourcing plans. So we'll move to the next one, Vivek. Now coming to the active and passive mix of ESG AUM in Asia, we can see an interesting change in the ongoing upward trend of passive funds. We see a minor pickup in the ESG AUM allocated to actives in the last 2 months of Q3, reversing a continuous loss of active assets to passive. This is even after actives have seen much bigger outflows. So this is not a change of investor preference. This is mainly reflecting the strong uptick of large cap and tech stocks that tend to dominate passive funds, right? So the drawdown within the large cap and the tech stocks have been much higher, and therefore the AUM loss within the passive side. We'll move to the next one, Vivek. Now coming to trends in Thailand market, overall ESG AUM around USD 8 billion in a market with a total AUM of USD 120 billion. Almost good 8-9% of the AUM is allocated to sustainable investing or responsible investing strategies. So surely a good progress so far. Contribution of equity AUM is much larger compared to Asia and global markets. Other asset types are almost absent. You can see from the gray, the bar on the chart on the the portion that we have for that is allocated to equity. So it's largely the equity assets that are driving the sustainable investing within Thailand market. Likewise, ETFs in ESG space hasn't picked up at all. It's largely between mutual funds and the pension funds. We have seen majority of the allocation. And another observation is that AUM slide this year mirrors Asia and global chart. The trend has been largely similar. It's largely aligned to market macros. A large section of ESG AUM comes from global investment categories. So you can see from the table here, equity global and equity China are the largest categories from where the sustainable investing AUM has been generated. So with this, we'll move to the next one. Yeah. So this chart explains the split of ESG AUM between different themes. So we have ES, the theme which is incorporating all three pillars of E, S, and G have got the highest allocation, which is almost 76%. Likewise, the governance, the theme, the funds which are largely aligned to governance as a pillar have got the second highest allocation, which is almost 9%. And likewise, we have environmental, social, and purely just environmental as the themes having some allocation there. The table also explains the kind of negative screening investment strategies that are seen in the market. We have almost 4.3 billion out of 8 billion allocated to negative screening strategies. Majority of the product screening has been seen in weapon and tobacco. This is the largest category that we have, and the second largest is tobacco, weapons, and fossil energy. So there's quite a bit of spread, different combinations that have been used, but definitely the weapons have been pretty consistent across all. Weapons, tobacco, and energy has been quite popular across different screening strategies that we're seeing. We'll move to the next one, Vivek. So while we spoke of the sustainable investing trend, here just to give you a little high level overview of sustainable finance, more specifically the debt DCM related activities. The ESG, sustainability, and green bonds have seen a very strong pickup over over last few years. Last year was really a bumper year, but this year also we have seen a very strong issuances. Altogether, we have issued, we have seen the issuances of almost 600 billion sustainable bonds globally. And we have a very good mix between the the conventional corporate bonds and the sovereign agency bonds. The key markets within Asia region, we have seen Japan and China. They have they had quite a bit of strong issuances of sustainable bonds. You can see from the league table that has been put up here. We had some of the key issuers as Bank of China, China Development. They are the main issuer with like large size issuances within the region. And with respect to Thailand market, we have seen some good sort of growth. Last 2-3 years have been fairly strong. 2020 had issuances close to 6 billion. Last year we had around 4 billion, and this year alone we have again issued so far 4 billion. So Thailand as a per se as a market also seeing some good growth within the DCM activities aligned to sustainability issuances. We'll move to the next one quickly, Vivek. So here now I want to share a quick insights on from an interesting study, just to give you a little perspective how ESG ratings are being used by institutional investors and how that in turn impacts you as a corporate trying to raise money from these different investors. So this study was based on the survey results from the leading institutional investors on their ESG investment practices. A key point to note that the study observed a low correlation between the ratings from the leading ESG content providers. To draw somewhat a parallel, a similar behavior can be seen in the sell side research. The sell side ratings, for example, buy, sell, hold, or credit spreads are generally see a lot of variance. The rating divergence at times it is also helpful for investors as it follows both positive and negative information to be looked at. And this is somewhat is different for credit rating agencies. They are typically having high correlations. But however, we saw during the global financial crisis in 2008, high correlation was not very helpful. And on back of this trend, according to the study, 38 of top 50 asset managers use 2 or more ESG data and ratings providers. So you as a corporate, if you have done fairly good on one rating, the ratings, sort of provided by one rating agencies, that's not good enough. You need to kind of cover all the leading, rating providers to make sure that your practices are being very well evaluated there across all different providers. So also the study outlined that investors are putting their own overlay and research on external ratings and data. While it is helpful to receive standardized data from an external source, investors carry out their own research to take more informed decisions. So external sources plus internal research done by institutional investors that lead to the final investment decision. So this is just to explain how the ratings are used by investors, and in summary, the the inputs, your multiple inputs taken from external providers with an on overlay of research is the most optimal method to implement ESG practices at institutional investors' end. We'll move to the next one, Vivek. On similar lines, want to quickly share a few more related observations on ESG ratings. How ESG ratings are delivered and used by institutional investors. We see few elements and processes are being very consistent across all ESG rating models. In addition to proprietary ratings and scores, all rating providers generally share the underlying ESG data with their clients. This includes raw data as reported by companies and data standardized by rating providers on common scale and units. Most rating models work on relative scorings, that is, companies' ESG performances compared with their industry peers. A large section of common indicators is benchmarked against global peers in each industry. Certain parameters are benchmarked with their country peers basis their application and relevance. So a global as well as local data pool becomes really very important from the from the perspective of relative benchmarking. Materiality metrics is a crucial building block of a ESG rating system, mainly outlines the relevance and the significance of individual indicators to a specific industry. SASB, which is the most common disclosure framework, followed by quite a many institutional investors, corporates, also provides an extensive materiality matrix as part of their disclosure framework. Most rating systems provide aggregated scores for high-level themes, mainly mapping a large section of indicators to a broader category, for example, climate, human rights, so on and so forth. Likewise, most rating models also provide aggregated combined scores for pillar E, S, and G, and the overall ESG ratings and scores. The scale and the application of these building blocks varies between different investor communities. Some investors seems to follow a very granular approach, build their own materiality matrix and scoring system. We see varied investment approaches are supported by the raw data proprietary scores offered by rating providers, and accordingly you can see the the different types of investment strategies that are being supported, that are being sort of built by varied institutional investors. So in our subsequent slides and in the next section, you will see how our ESG data models aligns these broad usage and the delivery trends. Vivek, now over to you for the next section.
Thanks, Deepak, and thanks for that. Yeah, so for the next few minutes, I'm going to take us all through what is our ESG assessment model, and then talk about a few key principles regarding our model, and then how we as an organization have evolved to be able to give you more up-to-date assessment methods, and then talking about our team strengths as to how we deliver the data and customer service to all our users of our data, and then followed by a few median level data analysis of ESG scores based on FTSE ESG data. So over to the first section, first part of this section of our presentation. So the FTSE ESG data model is a very simple and easy assessment model, very simple to understand. What has been done is we have carefully selected the most relevant themes for different companies across the globe under the environmental, social, and governance pillars. So under environmental pillars, you have biodiversity, climate change, pollution and resources, water security. And then the measures under these themes will be able to help us to assess companies' performance against these metrics. Similarly, on social, the labor standards, human rights and community, health and safety, and customer responsibility are most relevant themes under the social pillar, and therefore the measures that are assessed are related to these indicators, related to these themes. Similarly, on governance, you have anti-corruption, you have corporate governance, risk management, and tax transparency. So measures or indicators related to these themes are assessed based on public information that is disclosed by companies. We have around 300 indicators that are rolled up into these 14 themes, as we see on top, into then 3 pillars. We get an ES and G score, we get theme level scores as well, and we get one final ESG rating. Now, how we do the scoring, on the right hand side, if you see, it's nothing but the theme level indicators also has a theme level exposure. That means each industry will have a different level of exposure, different level of relevance to that particular exposure. Higher the exposure, the more indicators need to be answered, and those exposure help us to weigh those indicators more heavily, giving more importance to those measures, which are more impactful towards climate change. Similarly, using those theme exposures, we are able to get a weighted average calculation at pillar level. And then similarly, at the pillar level, we also use the pillar exposure to be able to come up with an overall ESG rating. How do we determine the exposure? Exposure is determined by our research team based on a lot of data analysis that's done. And that's how exposure is determined. And companies are assessed based on the industry classification benchmark. And related to that classification benchmark, the different pillar exposures are applied. And therefore, we get the exposure weighted final ESG rating. Now, coming into the scores, in terms of the scores that we finally get, these are absolute scores starting from 0 to 5. 5 means best practice, 3 means good practice, 0 means no disclosure. Exposure. What is exposure? Is nothing but the relevance of a particular industry to a particular theme in these environmental, social, and governance pillars. High exposure means that it is most relevant to that industry. The company needs to disclose more items for that particular theme and to be able to score higher. And then 2 is medium score. Medium level of exposure, 1 is low and 0 means negligible. That is, it's not, that theme is not relevant to that particular company. So now I will move on to the next slide to let you know how a little bit more on exposure, because this is a very important theme as to how we will be able to assess companies appropriately. So we measure the relevance of an issue, that is the exposure or the risk to company, which is based on the exposure matrix developed for each theme. A company is categorized into high, medium, or low, or negligible exposure. Where it is identified as a negligible exposure, the company is not assessed against that theme. The last is where the exposure is high, as already mentioned. The company needs to answer all the indicators, and based on its disclosures, the company is assessed. So that's how the exposure levels are used and are determined as well. I'll move on now to 4 key principles of our assessment methodology. These are our cornerstones of our methodology. We enable, the first one, we enable all companies to review the information as what we have collected as an additional data check mechanism. This ensures that companies are treated fairly and assessed transparently based on publicly available information, ensuring that all of us end to end, we have a consistent understanding of the indicators and how they will be assessed. And the third one is we take on board corporate feedback on criteria to improve and refine methodology over time. We engage with companies and see where we need an improvement in our methodology over a period of time, making it more relevant. And the last but not the least, it also helps investors to encourage improvements in corporate disclosures and practices and performance. We help companies to understand those indicators and help companies to improve their ESG performance. I'll now move on to just a very high-level example of how the exposure and the scores are generated. And so under environmental, social, and governance pillar, this is just an example. As already mentioned, these are scores that are determined as we roll up from indicator to a theme to a pillar level. At each level, there are weights that are given. Weights are nothing but the exposure of an industry to a particular theme. And those weights are used to calculate the weighted average score as we roll up. So for example, we are at a level of environmental, social, and governance level. The exposure is 2.5, 2.5, 2.5. This is an example case. And the scores based on, as we have rolled up, are 3.1, 2.2, and 2.4. It's just a simple average of this score, and we get a final rating of 2.6. These ratings, these ESG scores, these ratings are used in index construction process. I'll move on, and now, this slide tells us as to how FTSE for Good, our FTSE team has made regular incremental enhancements to make a methodology and standards relevant to the industry. and we provide greater investor focus on climate risk. So making it easy for investors and users of the data and companies to understand what needs to be done to get to a carbon neutral situation, carbon neutral scenario. So over the years from 2014, 2018 and 2021, we have seen that more focus has been given to climate change related indicators as under TCFD, which was incorporated in 2018, and in 2021, we have streamlined and started assessing companies based on TCFD related, that is Task Force on Climate related financial disclosures. On those measures, on those KPIs, our assessment model is now aligned. Moving on to this one, keeping on to the same theme as to how our assessment methodology has kept up with the latest needs for climate change. I would say that we have incorporated transition pathway alignment related fields in our assessment methodology, which helps us to generate management quality scores. There are 16 measures, as you can see. We will share the slides with you and you'll be able to see. But just to understand what these indicators mean is that we give a level 0 to 5 rating or scores for companies as to how many indicators they have been able to answer positively. Level 0 means there is no acknowledgement by the company. There is no statement that we see in the company's publicly available information at all. Level 1 is just acknowledgement that they have a commitment. They acknowledge that there is a climate related risk and their company is impacted by that risk. That's all. Level 2 would be building capacity. That means they have set up a management team to oversee emissions and are able to determine their emissions. They're able to determine the measures, the quants in terms of the emissions. Level 3 and level 4 are the ones where there is more higher and senior most level responsibility inside the company at a board level. So level 3 integration would mean that yes, there is somebody at the board level who's responsible for ensuring that there is action on climate change, and there are policies and procedures being taken. There are targets as well. But level 4 means also that it is integrated into a strategic assessment process. That means risks are seen as opportunities and integrated into their scenario planning, and then the future strategic assessment. What could be the opportunities taken by the company, and what could be the key capital expenditure decisions that need to be taken to be able to turn them into opportunities. So that's the level 4, and level 5 means all indicators have been met. That means company is having a very high management quality score on transition pathway, as well as that means onto the path to net zero. Moving on, I'm just talking briefly about the team that is behind providing the data and doing quality assessments, providing service to our customers or companies that request that come and want to know more information, and our specialist teams and product investment team. So the ESG content operations team consists of 140 analysts, and the average experience is around more than 2 years, and they are experienced in collecting ESG data. We have a specialized service and quality team consisting of 40 senior analysts who do detailed quality analysis checks, who have technical skills also and very deep content knowledge, who understand the industry and are able to perform detailed quality checks and provide high quality customer service to customers. Let me just tell you that we are driven by metrics called market driven metrics that helps us to ascertain what is the level of performance that will differentiate us and make the customers happy. And similarly, the operations team and service quality teams are also governed by those metrics. The specialist team consists of experienced team members who take care of framing policies, who take care of data methodology and technical aspects, ensuring that data flows seamlessly to the products. And the average experience is more than 8 years. We have a very senior and very experienced product and investment team consisting of experts who help us design some of the best products in terms of various investment solutions that the team provides in terms of various modes of dissemination of data, I would say. Yeah, so that is our team. I will now go on to the next section about looking at FTSE ESG data and talking about how we've analyzed the data and come up with some key trends, key highlights for Thailand market. We have taken the ESG median scores for Thailand, and we have seen that the environmental median score is at 3, the social media median score is at 3.3, the governance median score is at 3.7. We have now focused in the next 2 or 3 minutes, we just focus on the environmental pillar because we just want to keep it simple and easy. So environmental pillar, we'll now see the top 5 sectors that are performing the best on the environmental pillar based on our assessments. And those are consumer goods conglomerates, food and drug retailing, chemicals, energy, fossil fuels, and applied resources. Those are the scores. This is based on the latest data that we have on our system. We'll move on next, and this is nothing but the sector-wise median scores for the environmental themes now. This is going one level deeper from environment to the themes. 5 most important themes in the environmental pillar. Those 5 pillars, those 5 themes are climate change, as you can see in the bottom table, climate change, biodiversity, environmental supply chain, pollution and resources, and water security. So those are the 5 main themes under environment. As you can see on the top, you will see that on the left, the deep blue part is about climate change. The next bit orange is about biodiversity. The gray part is about environment supply chain. So these are median scores for different industry sectors. Yellow is for pollution resources, and then the light blue is for water security. So that's how it is. Again, we can see that consumer goods conglomerates, applied resources, chemicals, energy, fossil fuels, utilities are the top 5 in terms of scoring higher on these 5 themes, and the sectors where we may need to see more better performance on environmental themes are insurance, banking and financial investment services, healthcare services and equipment, transportation, and telecommunication services. That's it from my side. I will now hand it over to Helena, who will take us through FTSE for Good and Sustainable Investment Index Solutions.
Thank you, Vivek. Can you hear me okay?
Yes, thank you.
Great. All right, thank you. So I'll introduce myself first, and then I'll talk through how we apply the data that you've heard about this morning in an index context. So I'm Head of Sustainable Investment for the Asia Pacific region. I'm based in Hong Kong, and I lead a team of product managers who are distributed across Asia, including in Sydney and also in Tokyo and Shanghai. So we're a very, I would say, multi-regional global team in line with the nature of the business. And our aim really is to build sustainable investment indexes which reflect the objectives, the views, and the requirements of local market participants. We work very closely with the asset owners in each region to form strong relationships, also with the stock exchanges, as you're hearing now with SET, and we're delighted to partner with them in bringing this webinar. But we do have a number of very strong partnerships, including in ASEAN, particularly with Bursa Malaysia, where we are the index calculation agent for the main Malaysian indexes as well. And we do a lot of work together with the stock exchange there on sustainable investment, both through index, also through the data and the scores, and really helping to try and drive forward and build capacity in terms of understanding and acknowledgement and adoption of sustainability on a corporate level, also working with the investors there as well. Just a general introduction, I guess, to FTSE Russell as an index provider. We are one of the largest index providers, if not the largest globally in terms of assets tracking our benchmark. So we have over $20 trillion worth of assets tracking FTSE's benchmarks, including the Russell indexes in the US and also obviously the main FTSE indexes in Europe and in the UK as well. Some very important benchmarks here in Asia also. I mentioned Malaysia being one of those markets where we're very key to the ecosystem around the main market indices also. Deepak talked earlier about how you can integrate sustainability considerations and use this kind of data in active management, and how this is being adopted by fund managers, looking at a number of different scores. I'm going to talk now about how we use the data in passive index construction as well. And we're seeing increasing flows, as I think Deepak demonstrated earlier, in terms of assets going into ETFs and into fund mandates that are really using ESG scores and data as a basis for the construction of portfolios. We always start with the data, which is why you can see the various data sets. Sorry, you could skip back to the previous slide. Thanks. We start with the data, which is why what you see here is a list of the various data sets that we produce as a company. We also use some third-party data as well in building indexes, but data is really core to the value proposition. It's core to what we're building. So making sure that the ESG scores that we use, the climate data, is correctly and appropriately calibrated, that it's of a high quality nature, is backed by a very strong and transparent methodology, is central to what we do on the index building side. So we've got to start with the data and feel that really it's reflecting the relevant concerns through a sustainability lens as well. Now, ESG is one component that we use in indexes, and I'm going to talk also in this section about the FTSE for Good indexes and how we construct those. Again, they've been very, market leading, and I think a great incentive for both corporates and investors, particularly in the Asia region. I'll give some examples of some of the FTSE for Good indexes that we have here in Asia as well. So ESG is one element. I think we've talked a little bit so far about ESG and climate. Climate, obviously a very important part of what we consider when we think about ESG, but now becoming also a significant issue in its own right. So we're therefore now, and I'll showcase this in a slide that we have in the deck, but becoming sort of very important as an issue by itself. So we're building ESG and also climate indexes, as you can see here, multi-asset. So you've got sovereign data as well, both on ESG, also on climate, looking at sovereign bonds. We calculate and produce carbon emissions data. Also, we look at SDG aligned solutions, so the Sustainable Development Goals. And another element that I would focus on here is the green revenues that you can see on the screen as well in the product section. And green revenues and ESG, I think, are a very interesting counterpart to each other. ESG is really, as you've heard this morning, looking at the risk that's associated with sustainability issues and trying to manage that through an understanding of the level of material risk that companies face from different ESG issues, and then how they approach that and address those risks and seek to mitigate them through the actions that they take and then disclose to the market. When we're looking at green revenues, and I think this is another interesting data set from a perspective of what Thai companies are doing, it's looking at how companies are aligning their products and services with the transition to a low carbon economy. So as you can see, we look at this from two dimensions. We look at the products that companies build and that companies produce and are engaged in, and also the conduct element, so the behaviors around sustainability. So that's an overview of some of the data sets that we use to build indexes. If we can move to the next slide. So I mentioned that we have a multi-regional approach, that ESG is interpreted in different ways, particularly across Asia, which is not a homogeneous landscape from a sustainability perspective. I think if I look at what my colleagues are doing in North America or in Europe, I think there's a lot more consensus probably around what ESG should look like, and views on ESG, but it does vary by market. And I think as a service provider, which FTSE Russell is, it's really important for us to make sure that we're reflecting those views and opinions and being relevant to the market. So this slide effectively sets out a range of different considerations in the way that we build sustainable investment indexes And I guess a clear starting point for this is what investors want to achieve from a sustainability perspective. As you can see at the top, investing in a world that's changing or investing to change the world. So there are some investors, if we think about investing in a world that's changing, who recognize the importance of sustainability issues to corporate performance, and therefore want to take account of that in their investments and in the way that they are calibrating their portfolios and assessing corporate performance across issues that are obviously far in excess of the traditional financial criteria that portfolio managers have traditionally taken into account when they look at investee companies, and recognizing that there is a wide spectrum of issues, as you saw in Vivek's slides, in terms of what companies should be thinking through when they think about the opportunities and the risks that are inherent in their own business strategies. So some investors recognize that, they want to take account of that, but they don't necessarily want it to be the core feature or building block of their indexes. And for that, we would then perhaps use a tilted approach, and I'll talk a little bit about what that means in a minute, rather than a best-in-class or exclusionary approach, applying minimal or baseline exclusions. So not wanting to take out particular sectors. So that would be one way of including ESG is through applying exclusion. So some investors, as we know, will want to remove tobacco stocks, perhaps, by way of example, or gambling stocks, and feel they wouldn't be appropriate in an ESG portfolio. But there are other investors who prefer to stay closer to the performance of an underlying benchmark. And then in terms of investing to change the world, there are those investors who really want to have SI, sustainable investing, as a core objective of the portfolio, and to construct the index around the sort of the central theme being sustainable investing. There. So those are kind of the starting point that we think about is really, you know, how we need to be calibrating a sustainable investment index to reflect those outcomes. But if you can move on to the next slide. This slide walks through that process. So starting off with the investment objectives, are the investors happy to accept deviation from the performance of an underlying benchmark, or do they really want to stay in line with the performance characteristics of that underlying index? And then once we've ascertained the investment objective, because these are of course investment tools when we think about sustainable investing indexes. So once we know what the appetite is in terms of deviating from the performance of an underlying benchmark, we'll then go on to identify what are the sustainability outcomes that the investors want to see. And then based on that, we will recommend one of several different index construction approaches. So I mentioned tilting before as an alternative to a selection-based methodology. So with tilted indices, what we're doing is effectively keeping all of the companies, or all of the constituents of a benchmark within the benchmark. And rather than having let's say a threshold or an eligibility criteria based either around some element of climate performance or around an ESG score, we'll keep all of the constituents in the benchmark, but we'll adjust the weighting so that the weighting is then more heavily oriented towards those companies that perform better on a particular metric, or indeed it can be on several metrics, whether that is carbon emissions or an ESG score, or, for example, the green revenues data. So the performance of what companies are doing to align with a low carbon transition economy. So that would be a tilted approach. We can also build in what we call a target exposure element to the methodology. And that's where we say we want to, for example, increase the ESG performance of the index by a set amount, whether that's 20%, 15%, or 25%. Or if we want to reduce, for example, the carbon emissions exposure versus an underlying benchmark by 50%. So these are becoming also increasingly, I think, well-adopted methodologies, partly because investors, I think, for purposes of engagement and stewardship, want to retain their ownership of companies within a benchmark. So not necessarily screening out companies, but also wanting to, make sure that they're continuing with their ownership of all stocks in a broad market benchmark, so that they then have grounds to engage with those companies, but at the same time maybe minimizing their exposure to those companies that are deemed to be more risky, let's say, on a criteria like their ESG performance and assessed level of risk. The other methodology, of course, and this is core to the FTSE for Good index series, which I'll go into in a second, is around is really based on the principle of a best-in-class methodology. So screening companies in or out by reference to a particular data set and their performance within that data set. So what you can see here is on the screen, and as I think Vivek said, you'll receive these afterwards. I appreciate it's probably a little bit hard to necessarily read some of this script on the screen, but we have a range of different approaches to integrating sustainability within indices. So a number of different benchmark methodologies, again, predicated on the fact that ESG integration is not a one-size-fits-all approach. And I mentioned also climate and ESG, it's climate being a theme that we're increasingly breaking out as we see investors want to align with different criteria, a net zero environment, for example. We have overall about $260 billion worth of assets benchmarked to our indexes, of which the greater proportion is still in ESG. But we're seeing an increasing desire for investors to want to allocate to specific climate indexes as well. So becoming very important also in terms of the way that we build sustainability indices. We can move to the next slide. So for ESG index strategies in particular, I mentioned that there are a number of different ways of approaching index construction methodologies that will then lever off of the ESG scores that Vivek and Deepak have talked about this morning. So on exclusionary basis, so selective investments, so either excluding or including companies, so ESG leaders being those companies that are performing better on ESG criteria, and exclusions being perhaps wanting to take companies out of the index that are engaged in particular behaviors, whether that's product-based, whether it's because they're subject to controversies. For example, they've been highlighted as a company which has been involved in certain controversial behaviors that are not deemed to be compliant with a strong ESG performance or approach. And then integrating ESG, which I talked through a tilted methodology where we're effectively reweighting companies rather than taking companies out of the benchmark. And as I said, this is important from the perspective of stewardship. And certainly for asset owners, engaging with all companies across the market to try and elevate market beta associated with ESG and sustainability performance is something that we know is increasingly important and prevalent in terms of the way that investors think of ESG. And then aligning with different criteria that are now being set increasingly by regulators. I think as ESG has become almost mainstream at this point, I think there's a great desire to ensure that there are strong strong parameters and frameworks for the labeling of ESG products. We're seeing that increasingly in Europe with the Sustainable Finance Disclosure Regulation. I'll touch on that briefly also, and then wanting to frame indexes around integrating things like the SDGs that investors are aware of and want to bring into their portfolios through their passive investments. I think I saw a question pop up on the screen about how we identify peer companies, and this is obviously an important element, particularly where we're doing things like applying industry neutrality to try and maintain the underlying weights or the weights of the underlying benchmark. So we use the FTSE Russell industry classifications, which is the ICB classification. There's more information on that on FTSE's website. I should say also that there's an important element of transparency, both in terms of the way that the ESG ratings are constructed, and also in the way that we build indexes. Because index providers typically are highly regulated, you'll find a lot of information on our ESG benchmarks, including ground rules and detailed descriptions of methodologies on FTSE's website. But we also publish the ESG scoring methodology, which is a very long document. It contains all of the 300 plus indicators in the methodology to the companies and to the users of the rating. So that transparency and objectivity piece is key as well. We move on to the next slide. I'm going to talk a little bit now about FTSE for Good. So FTSE for Good was one of the first ESG benchmarks that was launched globally. It has about 20 years of history behind it. It was launched originally in 2001. Vivek just talked through how we have updated that methodology, and it's a methodology that's kept constantly under review to make sure that it's relevant globally to investors. As people will be aware, ESG itself is constantly evolving and changing, and it's really important to keep up with that and to make sure that the benchmarks that we produce are highly relevant in terms of reflecting current best-in-class practices. So ESG, FTSE for Good has a very long history, and it is one of the original benchmarks, but still highly relevant, as I just described. Vivek just talked about how we have updated the methodology to include the transitions pathway initiatives indicators around climate change. So we added in June 2021 some new criteria. Again, this is set out in the ground rules for the index for those who would like more information on how we incorporate those climate transition parameters. So that's a newer addition, but the whole fundamental basis for FTSE for Good is essentially reflecting, including in the index, those companies that are performing well on sustainability as reflected by FTSE's objective, transparent ESG scoring methodology. And at its sort of simplest description, we effectively set a level of ESG score for eligibility into the index. Now, we have a different score for companies in emerging and companies in developed markets, recognizing again that companies both across developed and emerging markets may be at different levels of their awareness and integration of ESG into the way that they approach business strategy. So therefore we have, and I think Vivek talked about the scores for FTSE Russell's ESG scores running between 0 and then 5, with 5 being best in class or the highest level of ESG performance and disclosure. So for companies in developed markets, currently the ESG threshold is 3.3 out of 5, and for emerging markets it's 2.9 out of 5. Now those thresholds again are kept under watch and consideration, and they will periodically move. And we do also see that as companies in emerging markets are really coming up the curve as they are in terms of their ESG performance, and I think the scores that we've just seen for Thai companies really demonstrates actually very strong performance, particularly on corporate governance. Then those two eligibility levels for emerging and developed companies are coming closer together as well, so that we're really capturing companies that are best in class in terms of their ESG performance in different markets. So I mean that's the sort of the ultimate, the basic criteria for FTSE for Good. It is a very straightforward methodology. There are also other criteria, as you just heard from Vivek, in terms of climate change. So there's now another threshold for companies in highly exposed or very carbon intensive industries. They need to meet a particular standard in terms of the climate change score theme score within the ESG ratings methodology. So that's under the select block that you can see here on the screen. And then in terms of other criteria, we also look at product involvement and have, I would say, a minimum level of exclusionary criteria for this particular index series. So we look at companies that are involved in controversies that would make them ineligible for the index. and also those that have exposure to specific product involvement criteria. And as you can see here, it's around tobacco, controversial weapons. So those are those that are typically outlawed by international treaties, and then to thermal coal extraction. So products that are really not deemed by sustainable investors to be appropriate to inclusion in an ESG portfolio. And then if we go on to the next slide, this breaks out in further detail the way that we build the index, starting here, and this we're using the FTSE Bursa Malaysia FTSE for Good Index construction as an example here. So starting with the underlying index universe, then applying the threshold for eligibility around the ESG scores. So for the Malaysian market, it's 2.9, as Malaysia is an emerging market. We would then apply the exclusions and controversies onto the index, and there is also some specific criteria for companies working in certain highly, certain industries or sectors that may be deemed to be, or that have exposure to certain activities that may attract an additional level of risk. And two, I think, that are specific to the FTSE for Good methodology are those companies involved in the production of breast milk substitute, and also in nuclear power, where they have to meet a certain threshold of, or a certain number of indicators within FTSE's consumer safety requirements. I think they need to meet 16 out of 17 indicators for those particular activities, for example. So it's a very straightforward methodology, but one which has become, I think, very important to a number of different markets. And I'm going to go on to give some examples of that. And the reason why it's an important methodology is really because it sends a very clear message to companies in terms of what they need to do to be included in the index. And the indexes in specific markets, Malaysia, I would say Taiwan, we'll talk about, also Japan, has become kind of a benchmark for corporate ESG performance, and I think companies are very pleased to be eligible for the index. They view that as kind of a mark of how well they're doing in terms of their sustainability strategies. So it's become important to corporate performance, also become very important to investors. And because of the fact that the methodology is very transparent, it's also then therefore forms an effective bridge between investor expectations and outcomes on the company side as well. So if you can go on to the next couple of slides. So we'll start with to give some examples, the Taiwanese version of the FTSE for Good index, which is effectively a partnership with Taiwan Index Plus, which is the index construction arm of the Taiwan Stock Exchange. So we have an index, a FTSE for Good version for Taiwan, which follows the standard methodology that I've just described for the Taiwan All Cap index. It's leveraged by, or was built really for the large asset owner in Taiwan, for the Bureau of Labor Pension Funds. But there's also a very interesting ecosystem that has developed around this index. We have a futures contract listed on the TAIFEX derivatives exchange in Taiwan, and also an ETF for retail investors to be able to access as well. So that's the Taiwan, the FTSE for Good TIP Taiwan ESG index. The next index, if we can go on to the next slide, is the FTSE Blossom Japan index. Again, was built for use by a large asset owner, in this case GPIF, which is the world's largest pension fund in Japan. This one deviates, in fact, from the standard FTSE for Good methodology. And I mentioned that we're very cognizant of the importance of reflecting local market considerations around ESG. So in this instance, as is traditional, well, not traditional, but as is most relevant in Japan, we don't actually apply even the baseline exclusionary criteria, because we know that that is not the way that Japanese ESG portfolios are constructed. There isn't the practice typically of excluding companies based on their exposure to certain industries like tobacco, for example. So in that sense, it does differ, but it retains the developed market eligibility criteria of 3.3 out of 5 of the ESG scores for companies to be able to be eligible. I think the other point to make here is that we changed the benchmark for this particular index from the Japan All Cap, which is a large mid-cap universe, to from the FTSE Japan index, which is the large mid-cap universe, to the All Cap. So we've now extended this, including the ESG scores, but also the opportunity to be eligible for the index to small caps as well. So we're at this point in time now rating 1,300 companies in the Japan market, which are then also eligible if they achieve the 3.3 ESG score for the index. And again, the reason for that is really because there was a desire to extend the opportunity, but also really to incentivize and to align with the performance of ESG across small caps as well. So again, interesting development for this particular index, which reflects the concerns and considerations of the Japan market. One final slide in this section before I hand over, I think, to Irene. I mentioned different criteria. I think we know that there's a concern around, as I mentioned, ESG becomes more popular, more widespread, a concern around making sure that products adhere to, let's say, a particular level around ESG standards or the standards of integration of sustainability consideration. SFDR is a European piece of regulation that has some very kind of clear requirements for the categorization of ESG products into what they call Article 8 or Article 9 or indeed Article 6, being, the not particularly aligned with an ESG objective. Article 8 and Article 9 are, and I won't go into a lot of detail here, but just to I guess put these out on the radar. There are two specific criteria that international investors have become very aware of, even though this is a piece of European regulation. Article 8 type ESG products effectively have ESG characteristics and need to subscribe to certain requirements around minimum social safeguards and demonstrating the application of good governance. And Article 9, which is what is being regarded as, let's say, a deep green type approach. So really having sustainability objectives at the core of the construction methodology. So, really it's just about kind of being aware of I think, developing requirements in light of concerns around greenwashing as we see more ESG products come into the market, and then FTSE obviously has a view on that and is building those requirements into, I guess, the way that we frame and label the products. So just to put that developing piece of, I guess, regulation and standards out there. I'm going to close there, Deepak, and I think, am I handing over to Irene for the next section?
Yeah, that's correct, Helena. Irene?
All right, thank you. So I'm Irene. So I'll share about the FTSE ESG case studies on Thailand companies, and also I do see there's a question in the chat box about the what is the regular schedule for the company, so which I'll cover here in my presentation. So basically, each of the companies will be assessed once a year annually. So here in the slides, we can see that I'll take an example of a company on the subsector of food retailers and wholesalers in Thailand. So this is an example of a company in Thailand. As we can see that on the very first table on the top, we can see the ESG ranking, the first row. We can see that over the past 3 years, from 2020 until 2022, we can see that the company is actually improving on their ESG scores, where you can see from 2020, it was 4.3, then it moved to 4.5 in 2021. And for the environmental score, which is more granular or more granular details on the ESG rating, you can see there's environmental score, there's social score, as well as there's a government score. So for the environment scores, we can see that actually the companies has a decreasing trend for this one, where they have 4.7 scores in 2020, and they dropped by 0.6% to 4.1 in 2021, and which they continue on until right now in 2022. And for social score, we can see that it actually in increasing stand, where in 2020 it was 3.7, then it further increased by 0.3 to 4 in June 2021, and further increased by 0.5% to 2021. And for governance scores, the same things happened as well, where it was 4.5 scores in 2020, then it increased by 0.5% to 5 scores in 2021, and now it maintains the high scores as well. So overall, we can see that this particular Thailand company in food retailers and wholesalers subsectors are doing very well in these aspects. So the table below here, you can see that in deeper dive on what we can see, what are the themes that are actually applicable to each of those pillars. For example, in the environment pillars, you can see that climate change, pollution and resources, and supply chain environmental is applicable to this company. Whereas for social pillars, you can see supply chain on social, labor standards, high human rights and community, as well as customer responsibilities are the applicable themes for the social pillar. And lastly, for the governance pillar is the anti-corruption and corporate governance. So for all those different themes, we can actually see that there's different levels of exposures as what being shared by Vivek earlier on. So we can see maybe one more click, Vivek, we can see, yes, thank you. So we can see that for the red color indicates that the team is actually high exposure to their companies. And then yellow color, it means that it's medium exposure. And if it's a green color, it means that it's low exposure. Or if it's gray color, it means that this team is not applicable to the company. So we have seen an overview of this company on how it scores, how it performed for its overall ESG scores. Right now, we're going to have deep dive further into to see each indicators for the companies. So, for example, in this environmental pillar, the relevant theme for this would be climate, and also an example of the indicator would be, as you can see here, is like climate change impact, including carbon dioxide or GHG, which is greenhouse gas emissions, whether the company has the policy or commitment statement towards this. And for this one, we can see that the company actually met a score of fully met. What fully met means that for this indicator, the companies actually address the issues in their company. And then secondly, the companies also reduce or avoid the impact or improve the efficiencies in the company as well. So because they have actually responded or actually disclosed that they did do these two pieces in their company, that's why they score a full score for this one. So the next example will be on pollution and resources team. Sorry, Vivek, back to that. Yeah, so that will be on pollution and resources team. And then examples of indicator for this one will be on pollution, which is the policy or commitment of the statement from the company to address the issues. And for this company, they actually revealed this. That's why they have a score of yes. But then deep dive further, whether the company actually reduce or avoid the impact or improve efficiency. Unfortunately, the company did not disclose this. That's why it scores no for this. So overall, for this indicator, they score are partially met. So for next one will be a supply chain. An example of the indicator would be on whether it's supplier or sourcing policy or commitment statement that address energy use. So for this one, they do address. And also furthermore, they do address about climate change implied, including the carbon dioxide or the greenhouse gas emissions. So from here, from this table, we can see that these are the scores, and further on to the right are the reference used or the reference of the evidence provided by the company to indicate that they do all those claims. Yeah, so moving on next one, we can see that will be an example on social pillar. So the first theme that we're going to see will be on supply chain. Yes, an example of the supply chain indicator would be whether it has a supplier policy that addresses prevention of child labor. And in this case, it talks about whether there's a general statement address the issue or requirement of supplier to legal complaints. And for this company, yes, they provided this in the supplier code of conduct. And also, that's why this goes business as well, because it has policies or principles on this. And next one, for next team would be on labor standards. And examples on the indicators would be in relation to the prevention of child labor in a company, whether the company actually addressed the issue or states it complies with local laws in general disclosures. And in this case, yes, they do this and they disclose in their Sustainable Development Report. And then furthermore, did they publish a policy or a principle around this? That unfortunately, no, for this company, they did not do that. That's why they score a no for the second option for this indicator. So next theme would be on human rights and community. So an example of indicator would be whether this company has a public commitment to respect and support the protection of internationally proclaimed human rights. So here it says about the company's commitment to include reference to international human rights instruments, including those contained within the International Bill of Human Rights. Yes, the company do this, and also the company has also made a specific commitment to apply to either on the United Nations Guiding Principles on Business and Human Rights as well. So all this, the companies actually show evidence in their Sustainable Development Report. And the last theme for this social pillar is customer responsibility. And a sample of indicator for this would be on the involvement in industry initiative for processed food and safety. And unfortunately for this one, the company did not disclose any membership that is relevant to the industry initiative, or they use any support for relevant code or guidance. That's why this company scores not disclosed for this indicator. So moving on to the next pillar, which is the governance pillar, we can see the first example of the theme that applicable to this company is anti-corruption. So the sample of indicator we can see here will be on bribery policy or commitment statement. So it sees whether actually the company addressing countering bribery, and not only countering bribery, they also see whether the company actually specifies countering at least 2 different forms of bribery related activities. And here you can see that the company actually do address this, which you can see in their anti-corruption policy, as well as their gifts and hospitalities procedures. And the next applicable theme for this company on the governance pillar is corporate governance. So a sample of indicators would be on separate non-executive chair and CEO. And for this company, it actually has a separate non-executive chair and CEO, where chair is not independent or the independence is not declared. So it's a yes. So unfortunately for the second indicator, sub-indicator, it says that there's no separate non-executive chair. So that's where is it? So it can be found in the annual report as well as the board of directors web link. Okay, all right. So moving on to the next slide, we can see a brief, so we can see the updates on the or a brief summary of how this company fares against its peers in the same subsector, as well as against country on an average. So for the first graph on the top, we can see it's about environmental themes. So on the red color, you can see it represents the company. We can see that it scores for the climate change, it scores 3, as well, while the peers in the subsector of food retailers and wholesalers, it scores 1.8, while averagely in the country, Thailand itself, it scores 2.2. So next, it will be on the environmental supply chain. You can see, once again, it scores very high on 5, while its peers 1.6, and overall in the country 2.9. And for pollution resources, it's 4, then the peers 2, and the country 3.3. So for social teams, we can see the company is doing 5. It's scoring high 5 for its customer responsibilities, 1.4 against its peers, and 2.9 against its country. And for human rights and community, it's 5, and then against its peer, which is 3, and against overall country is at 3.2. So basically, this is how we the summary of how this company performs against the subsectors as well as the country as a whole. So as a whole, we can see that this company is actually doing very well, because we can see among all its peers, regardless which teams, they are scoring very high. And apart from that, we can see that even within the country, they are the toppers within the country. All right, thank you. So moving on next, I would like to share another examples of companies in the building materials and fixtures subsectors. Here we can see that companies actually improved their ratings from 3.8 to 2020 to right now here in 2021, even 22 at 4.4. So this is the breakdown that we can see for the ESG scores, social scores, and governance scores. And the table below would be the applicable teams for the this company. For example, for this company, the applicable team would be on biodiversity, climate change, pollutions and resources, supply chain, and water security. And for social, the applicable teams would be on supply chain, labor standards, human rights and community, and health and safety. And for governance, the applicable teams would be on anti-corruption, corporate governance, as well as risk management. So next, moving on to the next slide, we can see an example of the team for the environment pillar for this company, and we have a sample of indicators, which is about biodiversity, whether the company has a policy or commitment on biodiversity, and then whether it addresses the issues of biodiversity, and also whether it includes the commitment to reduce or avoid impact. And in this case, the company actually provides this report in its sustainability report. And for climate change, we're looking at an example indicators would be on whether the companies actually review that they address the issues on carbon dioxide and GHG emissions, whether they aim to reduce and avoid the impact. And in this case, they have both actually show their commitment as well as performance on this. So that's why they're fully met. As well as for pollution and resources, they're looking about policies on pollutions and commitment, whether they address the issues, and also not only address, but they actually reduce or avoid the impact or improve efficiency. And for supply chain, an example would be whether the suppliers or sourcing policies addresses energy issues, and also whether they address the climate change impact, including the carbon dioxide or greenhouse gas emissions. So in this case, we can see that it's fully met. And lastly, for this pillar, it's the water security. We can see that whether there's a policy or commitment from the company to reduce water use, whether they address this issue, and also whether this actually includes the commitment to reduce the water as well as to improve the efficiency. So in the next slides, we'll see samples for social pillars and also the applicable teams and indicators as well. So this is how this looks like for this company. And also moving on to the next slides would be on the governance pillar, as well as its different applicable themes such as anti-corruption, corporate governance, and risk management. So these three are the different applicable teams to these companies, and you can see that some of it are fully met and some of it are partially met. So moving on to the next slides, we can see a summary of the company's how it performs versus its subsectors peers and the country's averages. So for the environmental pillars, on the very first graph on the top, we can see that the company scores fairly well among its peers and within the country as well. We can see it scores at 4 for biodiversity, while its peers scores at 2.3, and the company as whole as a 3. And then same goes for social teams as well. We can see that the company is doing fairly well, and for governance teams, the same thing as well. So overall, basically, this is a summary of how these companies in the how it performs within the building materials and fixtures subsector. So the last examples I would like to share with you all is about mobile telecommunication companies in Thailand. So for this company, you can see that the scores, each rating score for this company increased by 0.4% from the year 2020 until right now. And we can see that they actually have a decreasing score by 0.1% for the environment scores. And for the social scores, actually improved by 1.2%, so that's a very good improvement from here. And then for the government scores, they actually increased or improved by 0.5% in 2021, but then they slightly decreased by 0.5% back to the original one in later year end of 2021 and up to right now. And also at the bottom picture or table here, we can see that are the teams that's actually applicable for this mobile telecommunication company. So for the environment, we can see that there's 3 different teams that is applicable, namely climate change, supply chain, as well as water security. And for social change, the applicable teams would be supply chain on social, labor standards, as well as human rights and community. And lastly, for the governance pillar, the applicable team would be anti-corruption and corporate governance. So next, we're going to deep dive and see what are the examples or samples of the indicators applicable to these companies under different pillars and team. So for the environmental pillars, you can see there's climate change and the samples of indicator. And we can see that the evidence of showing these commitments, we can see in its environmental policy. And for supply chain, we can see the commitment that they show here can be found in supplier code of conduct. And lastly, on water security, we can see that their commitment on this in the environmental policy. So moving on to the next slide is about how or the samples of the social pillar for this company. And we can see the applicable teams would be supply chain, labor standards, and human rights. As you can see, there's supply chain and labor standards are very high exposures, whereas human rights and communities are medium exposure. And we can see all these different commitments are being disclosed in the supplier code of conduct, as well as the human rights policy. And the last pillar we're going to look at is on the governance pillar. And the only 2 teams are applicable for this company, namely the anti-corruption as well as corporate governance. And from here, we can see that all this evidence of compliance, of performance, of disclosures can be seen in their annual report, in their anti-corruption policies and measures report, as well as their leadership and governance website. And the summary for this company and on how it performs against its peers in the same subsector of mobile telecommunications, as well as the company average we can see here. So although the scores are not very high for the environmental teams, but they still actually perform very well against its peers within the same subsectors of mobile telecommunications. And they perform well generally among the companies in the country, in Thailand. And for social teams, they score very high. They score full scores for all the 3 teams. And then, of course, the peers are scoring lower than this company. And for governance teams as well, it scores very high on the anti-corruption measures. But unfortunately, on their corporate governance, they only scores against their peers who scores 4.3, or within the country, which stands at 4.3 rates. So basically, this is what I like to share about the case studies on examples of the companies that we have in Thailand. So next slides, I will just have a quick share on what does it mean by having the scores being fully met. So for examples in this scores or in this indicator, we're looking for whether these companies have public commitments to respect and support the protection of internationally proclaimed human rights. So here there's evidence in the report of Sustainable Development Report, as we can see the 2 abstracts here. So these are the examples of how or where the company shows or disclosed their commitment. And the next slides shows how the company actually only shows partial met scores or response. For example, in this indicator, we're looking for whether it has a supplier or sourcing policy or commitment that address energy use. So in this case, yes, these companies do actually disclose their policies or commitment on energy use in the supplier code of conduct. But unfortunately, there's no evidence or there's no disclosure on addressing climate change and impact. So that's why they're only able to score the partially met scores here. So this is just the example of how the scores are met. All right. So moving on, talk about corporate engagement of the company. And I do see there's some question in the chat as well asking about how what are the channels that the company is able to connect with us on this, as well as what are the deadlines. So here I'll cover it here. So I hope that this gives you some idea on how we work. So corporate engagement, basically it starts after we have finished the assessment that I've just shared earlier on. So upon completing the assessment, the companies will receive an email from FTSE with the login credentials and instructions on this. So here, the next slide, I will show you how it looks like. So in the email, the company have a link which brings them to the main page of the platform, which is called the Sustainable Investment Data Platform. So on the top right of this website, there's a sign-in button. So you can click on it, then it will bring us to this page, which is the next slide. It will show us where the company can actually log in their username as well as the passwords. So Vivek, can you please show the next slides where this can be found? Yes, so this is here where the company can input the credentials and passwords as what being shared with them through the email. So this is the first part where the company do. So moving on, after this, the companies are able to review the assessment done by FTSE team, and also they're able to input the comments. So the companies are given 4 weeks duration to write all these comments. So in the next slides, I'll let you have a look on how it looks like. So this would be the page on how the assessment
Hello, Irene. So sorry, Irene. We cannot hear you. We cannot hear you now.
Oh, can you hear me now?
Okay, it's come back. Okay.
All right. Sorry. Yeah. So from this slide, so we can have a green box here that gonna let the company know what to do. Maybe Vivek, one click on the yes, thank you. So you can see there's green box highlighted here is about on the ICBs of the company. So whether this tells the company what they have to look for, all the instructions. And with the instructions, after they read through, and at the bottom, we can see what will be the assessment. The company have a look. And after having a look, then they can click on the yellow button, which will be highlighted here. One click, Vivek. Yeah. So you can see here where the companies will give their comments. And the next one, the green box here going to appear here again will be on the country. So the country will be instructions on the companies on how to review this. And then below it is the assessment, and the yellow box here will be on the where the company can input the comments. And lastly, the last part will be on the analysis or applicability of the activities by the company, and there will be the examples or the instructions given, as well as there will be a comment for this company. And then on the top one will be a general comment for this assessment. Yeah, so like I mentioned earlier on in the presentation, maybe the line was not clear. So this one, I intended it to be small because I would just like you all to just have a look on how it looks like, because this is an actual example of the assessment, which I don't think I'll be able to share it publicly here. So that's why I just like to share an outline here. So if you're interested to have a further look or actually look on this, you guys can actually subscribe to the FTSE ESG data, and you can have a good view on this, like how the team scores or things like that. Okay. All right. So on the blue box here would be a button where the companies can actually click to the next page where they can see the assessment applicabilities, the indicators for yes, correct. So from here, the same things again. For the green box, we can see will be the instructions for the company on how to do the reviews, and the green buttons on the left highlighted in the yellow box here, where would be the buttons for the company to actually click on each of the green buttons, and they're able to display the indicators that I've shared just now, and they're able to leave the comments pertaining those indicators. And the blue box here would be where the company able to go back and review the previous page. So basically, this is how it looks like. So I just give you guys an outline on this, on how it looks like on the assessment. So if you are interested to actually have a good view on each indicator on all the data, please feel free to reach out to us for the subscription. So next, after the company has reviewed, then the 4 weeks window will close. So the FTSE analysts will check on the updates, check on the comments left by the company and review it, and will update the assessments accordingly if it's applicable or it's confined to our ESG methodology. And after that, only then it's a publication state, which is the next slide. So they move on to the publication state. Yeah,
ไม่ได้ให้วางครับแก้มแค่ QR code พอเดี๋ยวตอนพี่พูดจบอะค่อยๆโพสต์ลง
Yeah, I think that's all from me. Thank you.
So we do have few questions in the chat box. If you want, we can go ahead and point them to our various speakers on the panel and then have them answered. So is it okay for us to move to the Q&A session now?
Sure, Deepak. You can start with the first question.
Yeah. So the first one, I think we can point to Helena. Helena, one of the, I think the participants wanted to understand from us how Thailand companies are being looked at while constructing index for FTSE for Good index for ASEAN market as well as FTSE for Good all world index as well. So, and how has been the performance of Thailand companies so far?
Thanks for the question, Deepak. So we do have the ASEAN 5 version of the FTSE for Good index. Thai companies are an important weight of that particular index. I think there are 40 companies, which makes up of the 5 markets has the greatest exposure. It's based on the FTSE All World index. So Thai companies actually perform very strongly within that particular index. I think we've seen growing interest in accessing the growth in the ASEAN region. I think that's an index that we expect to see more focus on going forward, as it reflects both sort of the growth prospects in the underlying region and the index, but also obviously the strong ESG performance of companies operating in the 5 markets that are included there. So it's an index that we expect to see more focus on going forward, and would actually like to do more with in terms of visibility, given that it aligns with both those two dimensions of both growth and also sustainability concerns.
Yeah. And then there was I think a question on the coal related business, so Helena, it will be great if you could also share your thoughts on the same point. So when we construct the our FTSE for Good index and other related index solutions, how we look at coal as a business, are we straight away sort of excluding them from our consideration? So it will be great to have your thoughts around that.
Sorry, Deepak, I didn't catch which sector you were referencing.
Coal.
Oh, gold.
Yeah, coal.
Oh, coal. Apologies.
Yeah.
Okay, so within the FTSE for Good methodology, we exclude companies that are involved in coal extraction, so in coal mining per se. I think for coal specifically, now we know that the companies involved in the energy markets are going through a process of transition, and I talked about stewardship and the understanding that integrated energy, oil and gas companies are going through that process, and that isn't something that happens overnight. So energy companies in general are not excluded from FTSE for Good. So we're not looking at oil and gas producers there. We're looking more at how they manage the ESG risks around their involvement in fossil fuels overall. But I think for thermal coal extraction in particular, it is one activity which is seen to have specific risk of stranded assets. And those are assets that are, you know, in the case of fossil fuels, will not have a shelf life going forward and therefore pose a particular risk to investors in terms of exposure to those companies on a balance sheet or those assets on a balance sheet, let's say. So for companies involved in extraction, they are removed from the benchmark. Having said that, there's also another dimension here, which is around coal-fired power plants. So utilities involved in coal-fired power plants, and they are not excluded. Again, we recognize as investors, you know, do understand that there is a transition process here, and that coal, in terms of its energy generation, from a utilities perspective, is still something that needs to undergo a process of transition, particularly here in the ASEAN region as well. If having said that, the elements of the ESG methodology that would apply to coal miners would be the same as those that would apply to any companies involved in mining activities or within that particular sector. And I mentioned, I think Irene was just talking through how companies can access a portal and how they can look at the overall methodology. So if they do access, companies do want to access that methodology, if they're companies with a score, they'll be able to do that. And then they'll be able to go through the methodology and see which data points and indicators are most relevant to their particular sector.
Great.
Hope that helps answer.
Yeah, so thanks so much for your all the inputs. Helena, we'll move to the next one. So Erin, this refers to the content which was covered by you in one of the slides. You mentioned about climate as a theme not receiving very high score for Thailand companies. So any recommendation from you in terms of how the scores can be improved?
Yes, thank you, Deepak. I think these scores can be improved when the companies understand more on the indicators that needs to be disclosed or what are the expects upon needs to be disclosed and improve on their disclosures. So by doing so, I do believe that their climate data scores will increase. Thank you.
Sure. Yeah, so I think the key message here is that I think corporates, they continue to engage with us as well as with other rating providers. They need to understand the indicators that are most relevant from the from the assessment point of view. So please do give a little more sort of attention towards how we are assessing companies, different indicators that are relevant to individual industries, sectors, and accordingly sort of put emphasis on disclosures and also improving your ESG practices around that. Right, and I think also want to make a quick sort of I would also request the audience here to leverage our one of the email ID, the customer service email ID that we have to support corporates as well as our users of our sustainable investment platform. The email ID is ftseforgood@ftserussell.com. We can actually have we can have this information added in the slide deck that we presented and have it circulated with the audience here. So a suggestion here would be to leverage this email ID to have better engagement with us. Please feel free to write if you have any doubts, you need any assistance, we'll be more than happy to assist. So yeah, so I think broadly this is the different questions that we have received. Okay, so how can companies, so I think some of the questions got covered by during the Irene's and other panelists session. So one of the question came on how the information that is being tracked on our side, how that can be accessed by corporates. So Erin did, I think, explain very extensively in terms of the different resources or the platforms that are being leveraged on our side to track information, how that is made available to corporates for them to verify the information and also share their own inputs, to confirm whether the information that is being tracked from our side that is correct or complete. So those feedback loop has been created, those resources have been enabled to the corporate. So please do leverage that. Please do write to our support email ID to kind of have more sort of assistance related to the platform as well as the content that is being covered by us. Yeah, I think broadly we have covered most of it. Let me just check from the chip. Yeah, any Okay, so are we charging any fee to corporates to access the feedback portal? I don't think so. There's no fee is associated to that. Corporates, they have free access to the platform to make disclosures and also verify their information. And anything else that we see here that we missed out? I think we covered most of it. There was earlier a question in terms of how we do relative comparison across different industries. So we have our standard industry classification system, ICBC. I think Helena did mention about that, and the same is also being used for carrying out certain exclusion while constructing the indices. So ICBC, which is our standard industry classification, is used for relative comparison purpose. I think, yeah, so we covered most of the questions that we see on the chat box, but post this, event, if anyone has got any questions, please feel free to write to us. As part of the slide, we will also share our coordinates, so in addition to our support ID, if you want to reach out to any of us at the panel on a one-to-one basis, we are more than happy to receive your feedback. Any assistance that you need, we'll be more than happy to help. Yeah, back to SCT team to take this forward.
Yeah, thank you so much, FTSE team, for your contribution. Before we end today's session, SCT team would like all participants to give us a feedback. You can click on the link in chat box or scan the QR code on the screen right now. And on behalf of SCT team, I would like to thank Deepak, Helena, Vivek, and Eileen for this useful and practical session. And again, please give a big applause for our speaker. I hope to see you again. Thank you so much.
Thank you so much.
Thank you.
Thank you.
Thank you. Bye-bye.
Bye.
Bye.